Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me on the phone, we have Caleb Silver. He's the editor-in-chief with Investopedia. Caleb, it's great to have you with us, considering the surreal times that we're experiencing in the market right now. I can't recall having gone through .com, 9/11, 2008, 2009, where we're seeing the velocity and the types of moves in the marketplace right now.
Good morning. It's troubling not to be able to be next to you at the NASDAQ, but I appreciate you having me on the program. And you said it, we are in highly volatile times. When you see market moves of 7, 8, 9, 12% in a day, you know that's not normal. When you see massive sell-offs of 10, 11, 12%, followed by massive up days of 6, 7, 8%, that's not normal either. These are highly volatile times, and it's because there's so much uncertainty in the market as to how deep and how long the global impact of the coronavirus will be.
Let's take a look at our first chart here. This is the Dow Jones versus the S&P versus the Nasdaq, and we can see exactly what you're talking about there. From basically the end of February on, these massive spikes, and it's only within 30 trading days, if not less.
Yeah, I mean, we were at record highs for all three of these markets about 3.5 weeks ago. So the stunning drop is unprecedented in market history. We've seen drops, big drops during the course of a day, of course, during 1987 and 1929, but we haven't seen a bear market come on this quickly ever. And it's because I think a lot of health officials and governments around the world were unprepared for the scale of the coronavirus and how economically devastating it could be. So we've had this massive sell-off as every big investor has flown out of risky assets like stocks into government bonds, into cash, into gold, and now the US dollar.
All right, now if we take a look at our second chart here, this is, of course, the VIX, and definitely a different look to this chart, spiking severely to the upside since February. What are traders or investors looking for there to potentially dip their toes back into stocks when they see some leveling out on the VIX?
Sure. Well, traders love a VIX that's out of control because you make money if you're a trader buying and selling, making money on the spread, and you're in and out of your positions over the course of an hour or a day. Investors, especially long-term investors, individual investors like me, don't love this volatility because we have no idea when things are going to smooth out. But the VIX is the volatility index measured by the Chicago Board of Options. It measures the amount of put options, that people betting the market will go down, versus the amount of call options, people betting that the market will go up. So that's an extreme territory right now, as there's a lot of bets that markets will continue to go down, but just a lot of betting either way makes that thing spike. And it typically foretells a ton of volatility and usually a downtrend in the market. You don't see this when markets grind higher. If you look, I gave you I think a chart over the course of a year. It was asleep last year as the market ground 30% higher. It has been on fire this year, given all the uncertainty and the massive amount of money moving around the world out of stocks and into safe havens.
All right, let's take a look at our third chart here, and it's kind of going back to the declines that we have not seen except for certain pockets in history. And here you're isolating certain dates where we see those big percentage moves.
Yeah, so if you look at some of the biggest drops in history, they've happened around times of enormous economic distress. 87, we had that crash out of nowhere. We had 2000, we had the end of 2018 where we went into a mini bear market for about a minute and a half. So we see a lot of these spikes and a lot of these movements that precede big market movements and big market downturns, and that is all that volatility and all that selling coming to a head. But what's important, Jill, is that this is not you and me calling our broker and telling them to sell out of stocks. This is massive institutional money controlled by the biggest banks, financial institutions, and pension funds around the world that trade algorithmically with software. When they see markets hit a certain point, break a certain trend line, or they hear certain headlines, they automatically sell, which begets more selling, which then brings the herd of individual investors into the selling. And that's why we see these massive sell-offs.
All right, and this is the perfect time to introduce our last chart of the day, the daily Investopedia Anxiety Index since January 1st, 2019. This is really interesting. I've actually never seen an anxiety index before outside of the VIX. What exactly are you looking at here?
Well, because we are Investopedia, we have some 22 to 23 million visitors around the world every month coming into our site. We're measuring the search volume and the jump in search volume percentage of key terms associated with fear and anxiety. And those are what you think they might be: bear market, correction, liquidity, bankruptcy, unemployment, all these economic terms, market-related terms, and policy-related terms. And all of these terms have been flying around as we've tripped circuit breakers, as we've fallen into a bear market. Stocks have corrected severely. All of these terms are popping on our site as people want to learn about them. And we usually see a jump in the anxiety index before the VIX spikes, because think about what people do when they get scared and they see big tremors in the market or they see bad headlines. They come to learn about what that means. What does it mean when the Fed lowers interest rates down to zero? What does it mean when stocks fall into a correction? So we're seeing the pop in the anxiety index before the VIX, and then we're seeing the sell-off in the market. So it's kind of a behavioral look at what investors are really worried about right before they take action and sell stocks or buy stocks.
Yeah, that's actually an awesome indicator.
Yeah,
Besides the VIX, yeah.
It's a great way to check the temperature of the individual investor who is super concerned right now about what's happening, and for good reason. And we check that every single day. And as you can imagine, it's screaming like a 2-year-old in the toy store when it's time to go.
All right, Caleb, thanks for joining us as always. Great voice of reason. Look forward to talking to you again soon.
All right, stay safe, Jill. Thank you.
All right, and thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.